Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. And I'm walking through the office this morning, and a crowd favorite pops out of his office and says, "Hey, who you got on the show today?" And I said, "Rob, I've got you on the show today." So thanks again, Rob. Thanks for
Miles,
coming in.
Good to be here.
So you were excited. What do you want to talk about today? Do we talk about charts? Do we talk about Jay Powell at the Brookings Institute?
I think we got to do that. I think we need to talk about Bankman-Fried and FTX.
Sure.
I think we need to see what Jay Powell is thinking. He tipped his hand a little bit, and the markets have reacted in a very strong fashion. Stocks are up, gold is up. But I don't think that he is changing his direction. He may not raise rates another 75 basis points, but maybe another 50. And the market is really reacting as if...
Super excited.
Super excited. Oh,
Yeah.
yeah. Oh, yeah. It's all coming back down again. He is changing direction, and I don't think he is. I think he's fighting for his legacy. He wants to be remembered in the same fashion that Paul Volcker was.
It would be nice if somebody were, because we've been in this string of being remembered for being the most aggressive Keynesian economist for the last 20 years. So to have somebody come in with a little bit of austerity in their blood wouldn't be such a bad thing, given the nature of what we've seen take place, dating all the way back to, say, the repealing of Glass-Steagall in 99.
Yeah.
And everything that's happened since then.
Yeah, it's been pandemonium since they took down Glass-Steagall. I mean, the markets have gone crazy.
So let's take a look at our crazy markets here, and then we'll dig a little bit more into what Powell had to say and a little bit of upcoming news with the most beautifully executed Ponzi scheme we've seen in about 10 years. So we haven't had one in a while. Madoff, I think, was the last one.
Yeah,
so
but he
it's been
makes
a while.
Madoff look like a piker.
No joke. All right. So starting out with gold, we saw gold come into and push into a previous high back in July, August in the 1800 range. Gold continued back down, and we talked about this continued fall over the last month or two. But as everybody in the precious metal sphere knows, gold has had a pretty significant climb since the beginning of November, gone from low 1600s all the way up to scraping close to 1800 again.
Pretty nice move. And paralleling the rise in the stock market as well. They seem to be going in the same direction.
Right. Most of your commodities are going up, along with precious metals and, like you said, equities. So it seems like we're seeing some strength moving back into markets other than treasury bills, because as we'll look at in a minute, the dollar is not doing so well like it had been. So gold right now sitting just below its July-August highs. I would like to see gold, if we're going to continue this push up, obviously we've got to put in a significant higher high. The last time we touched into this zone, we just barely scraped the bottom of it. We took a pretty minimal fall down. I think we dropped $40-$50. And now it looks like we're moving back up to it again. So let's say we get up into the low to mid 1800s,
right.
1850. Would be a very good argument at that point. Personally, I'd like to see something as strong as maybe 1950, 1975, and then a correction following that. Something that maybe even brings us down as far down as we are now. So I'd like to see something like that where we establish a strong push forward, a strong correction back down, a 50% correction, a 618 fib correction, and then we take the next step, maybe next spring, surprise, surprise, February, March, we seem to put these highs in gold on a regular basis, and now we're shooting for the old all-time highs up around 2,000, 2,100. So if I had to play out the perfect gold chart over the next 3 to 6 months, I think that's what it would look like. So what does that mean to the average investor? Do we sit around and wait? Do we dollar cost average in? What are you thinking? What are your clients doing?
It's a hard call. I mean, it's never a bad idea to dollar cost average. But at the same time, most of my clients aren't buying gold because they want to make a lot of money. It's like I've said before, they're buying gold because they have lost faith in the financial system, the political system, you name it. So as people consider these markets, they do need to consider the white metals, platinum and silver, as aggressive, but gold is just long-term. In my opinion, it's just capital that sees us through the next 3 to 5 years. And then we take a look around and see what is ahead. Because what I believe we are going into is pretty serious stuff. I mean, right now, the interest rate on our $31 trillion debt, just the interest payment from the federal budget is in the mid to high teens as far as its tax revenue is concerned. That's unsustainable. And as much as I want to applaud Chairman Powell for sticking to his guns, he'll never be a Paul Volcker. Paul Volcker was dealing with $1 trillion worth of national debt. It is 30 times that now. It's unsustainable just by itself. So to me, I tell people, you do it your way. You can dollar cost average, or you can just go ahead and take the plunge. Whatever you do, you need to have a significant portion of your assets in physical gold, and let's see how this whole thing plays out, because gold's not going anywhere.
Can Jerome Powell be 30 Paul Volckers? Can he be an entire offensive and defensive football team of Paul Volckers?
No.
No, I don't know who could. And I don't think that that's certainly not a goal. I do think he's doing what he can.
Yes.
And I've appreciated his forefront discussions and attitude going forward. I know we were talking before we started recording that I don't want to get lulled in, obviously. I think we're all cautious about anything coming out of the Fed Reserve, especially after hearing the rhetoric over the last 20, 30 years. But I have been appreciative thus far in the directness of discussion. I've been frustrated with the market's response to what I think is a very clear path that he's trying to lay out. So I am frustrated with how the market is responding, and we can have that conversation another day maybe. But
well, I think Wall Street is fighting for their bonuses right now.
Okay, that's fair. You got me on that one. All right, that's fair. It is the end of the year. You're right. Okay, moving back to metals. Thanks, Rob. Looking at silver. Now, we talked about gold kind of not quite taking that step forward quite yet. You've still got me on the fighting for their bonuses thing, man. That's going to kill me. Silver and platinum, on the other hand, I would argue look incredibly strong. And I think it makes sense. More volatile metal, cheaper in price, more driven by not just the financial and investment, security markets, but also driven by industry and production and so on and so forth. More capitulation, more volatile rises, and here you go. Silver's now put in multiple consecutive higher highs and looking incredibly strong. And it looks like with today's move up, almost 5% move up in silver today, it looks like we're about to put in another higher high. So silver looks incredibly strong right now. Platinum looks incredibly strong right now, which is not surprising given the same reasons I just mentioned about silver. And then you tack on the little thing of, say, Russia and what's going on with Russia and sanctions and the ability to get natural resources out of Russia. So the white metals look very strong right now. Does that have the potential to pull gold, the slow tugboat, up behind it?
Well, gold's been pulling them for the last few years. Gold's been the lead, but now the white metals look like they're leading, but the ratios are still way out of whack from where they have been historically. I mean, we're still in the 80-to-1 range of silver ounces to gold ounce.
Right.
Platinum is just now cracked over the 50% to gold. Takes a half ounce of gold almost to equal an ounce of platinum. It's a little bit stronger than that. So there's both a lot more upside there. It's just riskier.
Right. The volatility can make you lose hours of sleep.
It can.
At night when you're seeing things move 5% a day, 10% in a week. Speaking of 10% in a week, U.S. oil's up 10% since Monday.
Well, and speaking of 10% in a day, FTX has really blown up the crypto market. I don't think we've seen the fallout from that yet.
No, last I heard is thus far the number's somewhere around 50 billion.
Oh, God. That's disappeared.
Thus far.
Yeah.
But we're talking about, I think, 130 some additional third-party companies that are going to end up being affected by this. And we're talking about things like BlackRock.
Yeah.
And we're talking about things like Toronto Teachers Union pensions.
Yeah.
The sheer number of massive professional organizations that got into this, and what the fallout's going to end up adding up to is insane. I mean, Enron was $23 billion when it was all said and done, and we're already more than twice that.
Yeah. And we're looking at a domino effect. This could be the cracks that start a 50% fallout in the stock market. I mean, people could be fleeing for the hills if this is as bad as I think it is, and I believe it might be.
Sure. Something's got to trigger that concern, right? I mean, there's always one rock that ends up causing the whole dam to burst.
Yeah.
So, and we shall see. And then there's the political ties, which isn't the motive of this show. But when you have FTX making political donations to both Democrats and Republicans in the tens of millions leading into the elections, you start to wonder what kind of position they were trying to put themselves in as we moved into things like, say, Biden signing an executive order this spring to start researching the likelihood of exploring crypto aspects within a U.S. dollar.
They are in a testing phase for the new quote-unquote Fed coin, the new blockchain version of the U.S. dollar. I think we're a long way from that happening, but they are moving forward with that in spite of what FTX and Bankman-Fried have done.
So I think my argument today would be on the heels of a very positive response to Powell's discussion, which was not as positive as people want it to be. I think my response to all this is we really collectively need to be paying very close attention to money and politics and the interaction between money and politics over the next 6 months.
I agree.
And how the markets are going to respond to some of these capitulations. We're in a la-la land zone. It's the holiday season. People don't care right now. The average American is making vacation plans, and we're spending, not saving. It's Christmas present time. That's going to end pretty quickly. Mm-hmm. I don't want to put a damper. Don't let me put a damper on Christmas. I'm looking forward to mine too. That's not my point. But I think it's worth sticking in the back of your head that when we hit January, you may want to start reading the news again.
Yeah.
Well, thanks again, Rob. Appreciate it. Thanks for catching me this morning. It's always fun to drag you in here.
It's always a blast. Thank you, Miles.
So that's going to do it this week for Golden Rule Radio. As always, if you liked what you heard, do the YouTube things, or better yet, if you liked what you heard, why not give us a call? Why not chat with one of the advisors here at McIlvaney ICA to talk about your personal precious metals portfolio that you've hopefully already been accumulating, and maybe we can help you bring some structure and future to it. So if you want to talk to Rob or myself, Tori, Robert, or any of the other brokers here at McIlvaney ICA, it's pretty easy to get a hold of us. Just call our 800 number, 800-525-9556. You can also find us on Twitter, we're at ICA Gold, or at Facebook, McIlvaney Financial. Thanks again for listening. Hope you have a great week.